And thank you for taking time being with us today. Tell us a little bit more regarding your background and how did you get into real estate?
Yeah, well, thanks for having me. I'm looking
Sure.
forward to having a conversation. My background, I've got a marketing and advertising degree, and I started out in the corporate world working in ad agencies. I started buying real estate about 6 years ago, 5 or 6 years ago, just looking for a way to generate some passive income, and built up a portfolio of 76 units in Austin and San Antonio, where I live. I live in Austin, and it's kind of grown from there.
And regarding your first deal, can you run us through it a little bit?
Yeah, the first deal I bought, kind of in succession, we bought a duplex and we bought a fourplex, kind of within the same month. So, we decided to jump in and start investing. We bought in Austin. This was, I guess, 2012. A duplex that I had a friend who kind of was coaching me along the way. He was a broker and also had some rentals, and just kind of walked me through the process and encouraged me. And I'd been reading Rich Dad, Poor Dad, and he'd give me a Millionaire Real Estate Investor, and sort of decided to make the leap. We bought the duplex it was $212,000 US, and we put about $20,000 into it. And last year we had it appraised for $365,000, and we're currently renting it out for I think that property is it's about $3,000 a month.
And how long did it take you to close the deal? So when you found the deal and to actually closing, how long did it take?
Yeah, pretty standard, 30, 60 days. I don't remember exactly, but, just put it under contract. It was residential property being a duplex. So just kind of, got the mortgage approved, got it closed.
And from that, how did you make the leap to larger properties? So you have 67 today. So how did you make the leap? How was it the next one, then the next one?
Yeah. So, as I mentioned, we bought the duplex and then rapid succession, bought a fourplex. Later that year, bought another fourplex, and it just sort of snowballed and scaled from there. Number one, we really fell in love with the business, and you started to see that passive income coming in, so kind of funnel every dollar we could into that business. Benefited from being in Austin, Texas, where it's, had some really explosive growth and really crazy appreciation. So we've been able to refinance and, diversified a little bit, went to San Antonio, which is about, an hour from here, where we felt like we could get, really good cash flow, started buying down there a couple of years ago, and have just grown to a point where, 76 units between my brother and I. We did it all with our own capital, fell in love with the business and wanted to do this, on a bigger scale and share this with some of our friends and family and investors. And so we started syndicating deals, and, kind of jumped into the 150 plus unit space.
And what are you looking at a deal? So let's say both of us are sitting on together. We have a deal on the table. What are you looking for? What is the thing that attracts you to pull the trigger, so to speak?
Sure. We are value add operator. So looking for, a property that's in our markets in Texas, typically 1980s builds that are, kind of class B minus, C plus, that are in a good location, but are, have some meat on the bone, have some opportunity. They need some TLC, need some updating. And it's, we're going to come in and rebrand it, reposition it, just improve the overall quality of the property.
And regarding current market conditions, because I'm a bookworm and I'm a geek basically, so I run through the numbers all the time, and it seems to me that we are running on all-time highs and cap rates are getting a little bit compressed. What do you think about this? Where do you see opportunities now?
Yeah, we're certainly had an extended run of really good appreciation, a good market for a while now, and I think a lot of conversations about what inning are we in if this is a baseball game and nobody knows how long the game's going to last.
Sure.
I think we're still finding some opportunities. It's definitely tight and it's competitive, and the good opportunities are getting a lot of attention. I think in some ways you can identify if it's a good opportunity just based on the amount of traction and traffic it's getting. 192 unit deal under contract right now that, it was pretty competitive and had a lot of eyeballs on it, which, it was a great location. And in some ways that validated that it was a good opportunity. But you also, there are still opportunities out there.
But you need to be quick, right? Because people that are looking for value add deals, they kind of look for the same things, right? So when product comes available, they're pretty quick pulling the trigger. Would you agree?
Would agree, and I think that, for us, that comes down to just being an expert in our markets. I'm in Austin, Texas, and we focus on, Texas markets. So I've got the ability to, be on site walking deals, before they hit the market. You hear about something that may be coming out, or you've networked with an owner, just really understand the different nuances in the submarkets, and have a very good understanding of the relationships that are in that market and sort of the dynamics that are happening. So you can quickly identify, that's a neighborhood that I like. That's an area that I think we would want to operate in, or that's not something we're going to chase because I know it's going to be overvalued, or the area is not going to, it's not in the path of progress.
But regarding deal flow, are you always dependent on brokers, or you have other sources of getting deals? Because if cap rates are getting compressed, they know what you want, so probably not going to send you because they don't have opportunities. So how do you look for different opportunities besides coming from brokers?
Yeah, that's a great question. Obviously, I think that the majority of our deal flow comes from brokers. My kind of point of view and thought is that, it's their job, and they've been doing this a really long time, to know all the different owners and operators, and I'm not going to be able to build a better network more quickly than they already have in place. So I want to build really good relationships with those brokers, make sure that we're always acting professionally, make sure we do what we say we're going to do, make sure they understand exactly the type of properties and assets we're looking for, so that whether it's marketed or off-market property, they think of me when they see something come along. Now that said, we're actively marketing and networking with other operators and owners in the markets we work in. And if we get something, we haven't gotten anything yet, that channel, but it's certainly something that we do, and we want to be well known and active in the space. But predominantly, it's let's work with the brokers and kind of leverage their skill set and the value that they bring, and their expertise in our markets.
I've met a lot of syndicators lately, and a lot of funds, they are selling stuff lately. Are you selling stuff? Are you on the sell side, or are you still on the buy side? Although we are on a kind of a high-endish end of the capital markets.
Yeah, I mean, we're still on the buy side. Feel like the markets that we're operating in, Austin and San Antonio very specifically, and Dallas are markets that are, good long-term bets. The prices are increased from a few years ago, but there's still places with seeing population growth, it's seeing job growth, that, rent growth has been, 5, 6, 7% year over year. We don't expect that to necessarily continue at that pace, but there's still markets where good things are going to happen. And our typical timeline is sort of 5-year horizon. That's what we're targeting. And, I feel like in the next 5 years, those markets are going to continue to see growth.
But do you look for lower yields, or unless a deal meets your criteria, it's completely off the table?
Yeah, no, it's certainly, it's got to meet our criteria. And I think, we've always been pretty strict as far as how we're going to evaluate and underwrite a deal. It's got to have good, strong cash flow. For us, that's, 9% plus cash flow kind of day one. So we're buying, largely
man.